Lebanon's currency, the Lebanese pound, has faced a catastrophic crash, losing more than 90% of its value since late 2019. This economic crisis, one of the worst in Lebanon's history, can be traced to a combination of long-standing financial mismanagement, excessive borrowing, and political instability. The Lebanese economy, once lauded for its banking sector and entrepreneurial spirit, has been left in tatters, with profound implications for its population. The roots of Lebanon's financial crisis lie in its post-Civil War economic structure. After the Lebanese Civil War ended in 1990, the country adopted a pegged exchange rate system, fixing the Lebanese pound to the US dollar. This system relied heavily on the inflow of foreign currencies, particularly from Lebanese expatriates, to maintain the peg and stabilize the economy. For years, Lebanon's central bank, Banque du Liban, managed to maintain the currency peg by offering high interest rates on deposits, particularly in US dollars. This policy attracted significant capital inflows, primarily from the Lebanese diaspora, but it also led to a buildup of large public and private sector debt. The system functioned more as a Ponzi scheme than a sustainable economic model. Lebanon's political landscape has been characterized by sectarian divisions and frequent deadlocks, impeding effective governance and economic reforms. The government's inability to implement necessary economic reforms, coupled with widespread corruption, eroded public trust and deterred foreign investment, further weakening the economy. The situation was exacerbated by the Syrian civil war, which began in 2011. The conflict in neighboring Syria not only disrupted trade routes, but also led to an influx of over 1 million refugees into Lebanon, placing additional strain on Lebanon's already overstretched public services and infrastructure. The banking sector, once the backbone of the Lebanese economy, became increasingly unsustainable. Banks relied heavily on deposits, using new deposits to pay out existing depositors and the government, rather than investing in productive sectors of the economy. This created a fragile financial system vulnerable to any loss of confidence. External factors also played a role in Lebanon's currency crash. The decline in oil prices in 2014 affected remittances from Lebanese citizens working in Gulf countries, reducing the inflow of US dollars. This was a critical blow to Lebanon's dollar-dependent economy. The outbreak of the COVID-19 pandemic in early 2020 delivered a further blow to Lebanon's economy. The global lockdowns led to a decrease in remittances and a collapse in tourism, a vital sector for Lebanon. The pandemic also disrupted global supply chains, affecting Lebanon's imports and exports. In late 2019, public dissatisfaction with the government's handling of the economic situation erupted into widespread protests. These protests, though initially triggered by proposed taxes, quickly turned into a larger movement against the government's corruption and economic mismanagement, further destabilizing the country. The Lebanese government's unsustainable debt levels became apparent when it defaulted on its Eurobond debt in March 2020. This default marked the first in Lebanon's history and signaled a loss of confidence in the government's ability to manage its finances, prompting a further devaluation of the Lebanese pound. The Banque du Liban's foreign reserves started depleting rapidly, limiting its ability to support the currency peg. As dollars became scarce, a black market for dollars emerged, leading to a sharp divergence between the official exchange rate and the market rate, causing hyperinflation. The port explosion in Beirut in August 2020 was a devastating blow to Lebanon's economy and its capital's infrastructure. This tragedy not only caused significant human loss and destruction, but also had a crippling effect on Lebanon's trade and economy, further accelerating the currency's decline. Lebanon's traditional reliance on imports for basic necessities like food and fuel made the economy highly vulnerable to currency devaluation. As the pound lost value, the cost of imports skyrocketed, leading to inflation and a sharp increase in the cost of living, pushing a large portion of the population into poverty. The banking sector's crisis deepened when banks imposed informal capital controls, restricting access to deposits and blocking international transfers. This eroded public confidence in the banking system and led to a liquidity crisis, as people were unable to access their savings. The international community's response to Lebanon's crisis has been cautious. While humanitarian aid has been provided, substantial financial assistance has been contingent on Lebanon implementing comprehensive economic reforms, which the government has struggled to enact due to political fragmentation and lack of consensus among different factions. International donors and financial institutions are hesitant to provide aid without a clear reform plan, fearing that funds could be mismanaged or siphoned off in a system plagued by corruption and inefficiency. This hesitancy has prolonged the economic crisis, as Lebanon desperately needs financial support to stabilize its currency and economy. The role of the Lebanese diaspora has been significant in the context of the crisis. While remittances from abroad have historically been a lifeline for the Lebanese economy, the severity of the current crisis has limited their impact. Moreover, the confidence of the diaspora in the Lebanese banking system has been severely undermined, reducing the likelihood of these crucial financial inflows. Domestic political instability has further complicated the situation. The government's inability to form a stable and effective cabinet has led to policy paralysis. Without a strong and unified government, Lebanon has found it difficult to negotiate with international lenders, implement reforms, and restore investor confidence. The ongoing political impasse has deepened the economic crisis, making recovery even more challenging. In conclusion, Lebanon's currency crash is the result of a multitude of factors, including systemic financial mismanagement, political instability, external shocks, and the failure to implement necessary reforms. The crisis is a stark reminder of the vulnerabilities of economies heavily reliant on foreign currencies and the dangers of political paralysis in the face of economic challenges. For Lebanon to recover, it will require not just economic reforms, but also a fundamental restructuring of its political system to address the underlying issues of governance and corruption. As the Lebanese pound continues to struggle, the future of Lebanon's economy hangs in the balance, with significant implications for its population and the wider region. Thanks for watching Middle East Info. If you found this video insightful, please consider liking and subscribing.